What's going on, Carvana? Welcome back to the channel. As always, this is not financial advice. Hey, we've successfully traded Carvana in the past, and let's look into it just a little bit, see if there's a trade that could be popping up here. The insiders, if we look down here around the beginning of the month, they have sold around the $8 range. So could it be end of year profit taking, just kind of making a little bit of money while they can? Yes, it could be. Could it be something more? Yes, it could be something more as well. So keep that in mind. Let's look at the short interest. The short interest coming in right now, cost to borrow average right at 19.33%. Short interest of the free float, 52.86%, very highly shorted. Live short interest, 45.29 million. Cost to borrow, we just covered that. So shares on loan, days to cover 3.41, quite a bit of days to cover there. It had a pretty decent gap down at one point right here. You can see it, and it just continued to fall. We're in this falling broadening, which I mean, is not ideal if it's going to keep falling, right? But we're looking for the turnaround. Right now, it's in no man's land. But what I do want to see, $5.54, I guess, is going to be my first target where I would really start to get a little bit of interest back in the play. Right now, it's hesitating. It's stalling out right there and keeps getting rejected, but it's going back. We got one test, two tests. We'll see if it wants to go for a third test, but I do think that there probably could be a play potentially as far as what the short interest is on Carvana and, you know, what they do in the future. As of right now, the 30-minute RSI is sitting around 48.49. Same thing for the 1 hour. For the 4 hour, it has cooled off just a little bit, and same with the daily. So we're looking at it on a shorter time frame. What's it going to be able to do? You got to be tight with this one because it's going to become very risky. If you can be tight, if you can obey a stop loss, I mean, it's not that hard. It's like risk to reward. What do you want to do? On this one, I guess I'm watching $4.92 to hold. Right now, it is sitting at $4.92. So your risk to reward is okay right here. $4.81. I would probably have a stop loss if it was me. I know it's not big. It's 11 cents. You're like, what if they just spike it down to take it? Well, put it a little bit lower if that's what you want to do. I'm watching it because I think there could be a decent upside as well. I don't know if it'll play out or not. We're just going to kind of have to watch and wait and see what happens. But let's play with the trend line. Let's see what we can maybe line up here. I don't know if it's going to work out too well or not. I have not looked too far into it. Okay, perfect. You know what? I like that. I like that a lot. So here's our risk, right? $4.81. It's sitting at $4.91. Here's our trend line. It's trying to break back into it. How's it going to hold? That's the question. If it holds, I think it has potential to at least run back to $5.54. Maybe we'll get that test again. If we can get above there, $6.73. From there, we're looking to these intermittent lines around $7.40. And then you're going to have a tight little channel in there, 740 to 770 range. How does it respect? If it gets through there, look for $8.64. I would not be greedy with this one. I would be happy with, I don't know, 10, 20, 30, 40%. Right now, $5. So what's that? 10% is 50 cents, $5.50. $6, $6.50, $7. If we get into that range, that would be trading you back up into this channel at least. I don't know if it's going to be able to hold it, but I think the gap down, the sell-off was probably over-exaggerated. We haven't missed too much of it. I mean, there was a dollar move whenever I was watching the gap down and the extreme sell-off. High short interest, it's a risky play. Do not diamond hand it. Do not think that it's gold. Do not think that it's going to go to the moon. If you're just looking for trades, it's a trading channel. Look for these trading setups. Right now, like I said, the risk to reward is okay, even though you are in no man's land. Don't be afraid to cut it at 11 cents and watch for your trend line back down. If it wants to come back down, and check that trend line. Ultimately, your best trade's going to be off of the bottom trend line and sell at the top of the trend line. If it moves through the trend line, then you're just, you're jiving, you're doing your thing. But right here, you're in no man's land. Keep an eye on it. Keep a tight stop. But I probably wouldn't even do anything until tomorrow after FOMC. We'll see how FOMC goes. And then this could be an interesting trade again for a second time. So keep an eye on the RSIs, chart it up, keep an eye on your trading plan, what you want to do, how you want to do, what you want to do, and how you want to move in there. But again, not a diamond hand play. You make your trading plan before you ever even enter this one, because it is highly risky. And I know, we're all degens. We like the high risk plays, but don't get trapped in it. Don't hold the bag. Somebody else can hold the bag if they want to be the diamond hand that goes around to the chat rooms and say, hold, hold, hold. You want to make money. You want to hold your green dollars in your hand. That's the name of the game. All right, guys, I appreciate you coming back. I will catch you in the next one. As always, stay golden, people, and may your accounts stay green.